everyone. Welcome to our channel with Victor Say. Victor is a veteran, almost 4 decades veteran of the financial markets, both in the buy and sell side area, and also has been a teacher of financial topics in the local universities. Okay, so without further ado, Victor, well, again, we have seen that risk assets are all on again. The markets have seen another volatile week, and most recently, a bit of a surprise, I think, to me that Christine Lagarde has mentioned that the ECB is going to be a lot more aggressive in their bond buying. So it seems that it's given the euro a bit of a support or boost. Anyway, so what do you think of the markets that's happened this week? And also, what do you think are the important events next week, Victor?
Hey, hi, thanks, YC. Hi, everybody. Okay, next week is going to be an interesting week, specifically for euro dollars against the US dollars, and to a lesser extent against the yen and against the Swiss, because all those, like euro yen is now like 1.130 and euro Swiss is 1.11, and I do not really think the euro can keep on sustaining at these levels, against those two pairs. And of course, against the US dollar, it is also a problem at the current levels of about 119.60, 70 levels.
Right.
I think it's a little bit overstretched. Now, that is why I'm going to talk a little bit on it and where I see the euro going sometime next week. Okay, the important thing to note is that the passage of the US $1.9 trillion COVID bill only means one thing, and that is that the growth in the US is going to be very strong over the next few months.
Right.
There is no way that the US cannot grow at a very fast pace, given that everybody will be getting money, the consumers, the businesses, and the other parts of the economy. And it will definitely spill over into the broader economy. So therefore, with higher growth, right, across all sectors in the economy, there's only one thing that will happen, and that is it will lead to stronger demand and it will lead to higher inflation rates. Now, despite what analysts have been trying to say, there are many out there who say that, oh, because the pandemic, because of this, because of that, US inflation is going to be very tame. Therefore, US interest rate is not going to go up a lot. Now, it's very, very plain and simple that if the 1.9 trillion goes through and Biden is going to come up with another $2 trillion fiscal package, there's only one thing that will happen. Inflation is going to run hot. And by running hot, I don't see 2%, okay? I see higher than 2%. I see 2.5, I see 3%.
Really?
So, yes, a lot of people see 2% and go down. I don't think so. It's going to run. When it starts running, inflation, when it starts running, it happened in the 70s, to a certain extent, the 80s, and it doesn't stop. Mind you, it will not surprise me if I see even 4%. All right? Because when inflation starts running, it will run. So therefore, the yield, the 10-year yield, which went down to 1.48 last evening,
yes,
right, just before the ECB decision, I think that will probably be the low this round. All right, now it has ticked back up to 1.55.
yes.
And I think it will definitely be above 2 in the next few months. Because once the inflation starts to move, the market will price forward their expectation, and that will push the yields higher. All right, definitely it will move higher. So And this in itself will support dollar against all the other currencies. Okay, of course, specifically more so than euro, because euro has been strengthening against the dollar quite a bit over the last 10 months or so. And of course,
Right.
when we Aussie Kiwi, it has to be in that, because when the euro goes down against the US, Aussie and Kiwi will follow. But that one we'll save it for another day,
Sure.
right? Now, so that's the second one. And the other thing to remember, why I see the euro against US weakening a lot next week, is the dovishness of Christine Lagarde, like you were saying just now earlier on. The aggressive bond buying, you know, the PEPP buying from next month, they say they start, and they're not going to stop. And she actually used the word, all right, very important word, undesirable rise in yields, euro yields. That means she doesn't want euro yields to go up.
Right.
So therefore, she doesn't want euro yields to go up. And if Powell next week is nonchalant about US yields going up, then that's the end of euro. All right. So you have a widening. US yields going up, euro yields going the other side. So in such an instance, we definitely will see the euro on the defensive. Okay. But of course, if you see the current posturing of the market, euro against US, everybody, you know, wants to look at the charts and say 125, 125 half. Come on, my dear friends. I don't want to spoil the party, but I think even 121 is a tough call now for euro against US. So those who are chartists, please be very careful, because I don't want to spoil your party, but I think if you keep on doing that, you'll get burned to death, because fundamentals like that normally will win against the chartists anytime, right?
Sure.
I follow charts, but when the fundamentals are so clear cut, all right, there's only one way to do, that is to sell the euro against the US, right? That's why I say I'm specific. Of course, euro against yen is still will come down. Euro against Swiss will still come down, but against US it will come down a lot more. All right. So there will be a sharp fall against US dollars. And of course, finally, to repeat, the market is very long of euro against US dollars, because of the expectation that it's going to go 125.
Right.
So if you look at the CFTC positioning, wow, the euro US longs are like super long, terribly long. So there's only one way. If the US starts to strengthen and euro starts to slide, everybody wants to hit out the exit door, and the exit door is very small. So you can imagine what will happen to the euro rates. It's virtually going to crash. All right. So there is a long way for euro US to fall from current levels. By long, I mean up to 116, up to 115 even. All right. Imagine if US rates were to hit 2.2, 3%. Where do you think euro US will be? It cannot be where it is. So those of you who are chartists, please, I do not say that it cannot get there, but the chances are getting more and more remote. So if you can, I would get out. All right, I would get out, and I will go long. All right, the US short the euro, even at current levels, because I don't think it's going to hold. All right, so this is where I see it's what's going to happen. But in general, dollar will be stronger next week, and even today, you can see the yields starting to keep up much higher already. It's gone up. Okay, now it's 157.
Yes. Yes, that's what
10-year yield is now 157. So imagine if it goes to 160, euro US is going to kaput, you know. So please be very careful with your positions, those who are long euro against US. All right, so until I see you again next week, happy trading, and I hope this little segment will help you in making your decisions for next week's trading. Goodbye.
Okay. Thank you, Victor. And guys and gals, So remember what Victor said about the euro at a dangerous level. Be careful. Take care. We'll talk again soon. Bye.
Subscribe to our YouTube channel and click the bell reminder so you won't miss any special monetization opportunities. Go follow now.